All right, let me have our guests introduced here on the program. Professor Santosh Mehrotra, Senior Economist, Dr. Aman Chugh, Economist and Market Expert, and Ved Jain, Senior Tax Expert. Thank you, gentlemen, for joining us. Professor Mehrotra, so has the paratha become too hot to handle? Paratha makers believe that chapati and paratha are made from the same principal ingredient, the whole wheat flour. So if rotis are taxed 5%, why should paratha attract higher taxes? What's your take on this?
Frida, this is going beyond surreal and beyond absurd. This is the theater of the absurd. And the foundational problems with the GST are now being taken to absolutely Kafkaesque, surreal levels. Because there should have been ideally only three rates, whatever those might have been. One lower rate, very low rate for merit goods. And I would regard both paratha and roti as merit goods. And one a standard rate and one should have been on luxury goods. And that would have simplified matters. What the GST authorities are doing in their great wisdom, I have to say, who these greatly wise people are, I would like to meet them and try and understand their logic. Because what this is doing is bringing license permit Raj back. Who's going to determine what is what and what is what? I mean, this is really Kafkaesque. This is surreal beyond belief. And it's typical. It's typical behavior because this is going to bring great joy to small-time inspectors making money. And the government clearly is desperate for money. It's desperate. This is showing desperation that when you put, fuel taxes at a time when there's massive aggregate demand collapse. If you're putting petrol, diesel, and gas prices up because of taxes, you're continuously imposing indirect taxes on the ordinary people, and you've reduced corporate income tax and you've reduced personal income tax thresholds.
Right.
I mean,
so you're making a very important point here. What you're saying is the problem is with the larger taxation system. This kind of hair splitting has become ridiculous, and it is only going to give opportunities to the local inspector to make a fast buck. Do you agree, Dr. Aman Chugh?
See, partly yes. In fact, while government is always on its toes to gain maximum taxation out of, in order to fund off the fiscal deficit, because see, globally, we all know that we are entering into a slowdown or a recessionary phase globally. But in India as well, I think if we do not control over the fiscal deficit problem, that could mean that our rating agencies across the globe would be derating or maybe reducing down the rating for India so that the funds flow from the international world do not come into India. And hence, government would try to maybe bring a populous budget in 2023 because that will be the last budget before the elections come by. And hence, any opportunity would not be missed upon by the government in terms of increasing the GST or bringing more confusion as of now, so that the fiscal deficit could be reduced because of the higher inflation across globe. And it is impacting Indian economy as well, and the possibility of slowdown and recessionary phases coming into Eurozone, UK, etc. That would also impact Indian economy going forward. So maybe they wish to gather as much money as they would be possible. And in fact, on second aspect as well, a minor maybe plus minus 5% is on roti and 18% is on maybe a paratha. But 13% of an increase on a see, daily intake of paratha is how much for a common man. And perspective that way as well. Maybe the government does not want you to
Dr.
eat the
Chugh,
frozen
the distinction is being made between ready to eat and ready to cook. That is the primary overall, the arch under which this difference in taxation is, the difference in tax bracket is owing to the fact that one is ready to eat, the other is ready to cook. So therefore, does that justify this kind of a variance, or you feel that this is again, going to only lead to more confusion, and this disputes, these legalese will, ultimately, is it going to impact business?
See, it would definitely bring a lot of confusion. I agree to the statement. I'm not a tax expert, but I believe that whatever the government is trying to do per se, it will definitely increase the confusion. However, I think the larger picture in their mind is not to bring confusion at the doorstep of the common man, but it is more towards gathering as much as money on GST aspect, which contributes to almost 16% of our budget as such. I think that is the main agenda behind this policy make.
Okay, well, Mr. Ved Jain, if I can bring you into the conversation, that there's a larger design in place, there's a reason why the taxation is being done in this manner to generate revenue wherever it is possible, and the government is doing it with a clear plan in place.
See, frankly, Rita, I will not say that there is a clear design and planning. I believe this is more to do with the thought process. As very rightly mentioned in the beginning, Mr. Mehrotra mentioned that there is a merited goods and demerited goods. So merited goods, we said 5% is the rate we believe the common man, a consumer uses, and that's why we get 5% rate for most of the items which are a food item. And now I believe the authority, the ruling, the judges which are given, they are being carried away mainly by the factor looking to the nature of the product, where they believe it is for a common man, they believe it is 5%, they believe it may be a little higher state of the society, they believe it should be 18%. So that was not the purpose of keeping a rate of 5% and 18%. Take a case of a chocolate and Indian mithai, you say 5% and 18%. I believe in Indian mithai, there is a chocolate barfi also. And in case you make call it an Indian mithai with chocolate barfi, it is a 5%, but then you make a chocolate, then it is 18%. So the psyche is working that no, chocolate is being used for higher strata of the society. So let it be 18%, and Indian mithai should be for common men, then it is 5%. Similarly, when we come to chapati and paratha, I believe chapati and paratha are one and the same thing. Chapati you can also have with vegetable oil. You can put some desi ghee or some vegetable oil there on also. Similarly, in paratha, what you do is, it is with a cooked food, with a vegetable oil. And when Vadilal made an application, there were 8 paratha and one was a simple paratha, which there was no ingredient added other than the vegetable oil. So chapati and paratha, I believe, are one and the same thing.
Mr. Jain, I must say that I'm impressed with your improvising skills. How to turn a chapati to a paratha, in your words, I think should be interesting. That there isn't much of a distinction there. If you have an innovative mind, you can do it within seconds. Just put some ghee, that's it.
I say yes, and they say no, it is cooked. What is cooked? Everything, but you have a packaged food, you have to heat it. So paratha is not being put on the fire just to make it more tastier. Now, even if you have a chapati, you may put it on the gas burner to make it a more crisp, more like a tasty. And some people may not like to crisp, and then they may not like to heat too much. So putting paratha for 3-4 minutes and making it a little bit more, I think, shining or made bright. And then you say, no, now it is 18% and then 5%. So heating will cost you additional 3 times of the tax, 5% to 18%. So probably, I just say, idea is not to raise more revenue. Idea is to go hair splitting, which probably was not required. The objective of keeping 5% on these food items was that these are food items. And food item, by and large, will go 5%. Similar to, so now
which is
all
why,
these Fram and papad, I don't see any difference. Fram is an English word, or maybe you being used by a little, I will say, more urban people rather than being used by urban and rural people both together, papad. So that's why you say, no, Fram is 18% and then 5%.
Which is why, you know, even politics is now brewing over this, with Aam Aadmi Party leader Kejriwal saying that even the British weren't taxing food like the BJP government. He attacked the Gujarat state government for imposing an 18% GST on Garba events during Navratri. In 2020, Eid was also hit by a similar ruling when Karnataka AAR said that its frozen Malabar parota should attract 18%. So this has been a raging controversy. But coming back to you, Mr. Professor Mehrotra, you were saying that after all, here is an issue that has only complicated matters. GST was supposed to simplify. So are we saying it just defeats the entire purpose of having a simple taxation policy?
Absolutely correct. Frida, the answer is in your very question. You see, original idea, we've been discussing the GST for over 10 years. And the BJP was opposing this when it was in the opposition, and then it made a big tamasha out of it on July 31st of 2017. Point is, the original idea was that there would be just 3 rates. So this is a concoction of this government that we have 5 rates and we have complications within those 5 rates. And as it is, the GST was implemented without any preparation or not sufficient preparation, as a result of which the Ministry of Finance has been in conflict with the Infosys. So, all we are seeing is, notification after notification after notification, year after week, and now you get this kind of silliness gone berserk. I mean, there is a limit to silliness, and honestly.
But GST is deemed successful, Professor Mehrotra, isn't it? There's been a collection of more than 1 lakh crore a month since October 2020. The government is tom-tomming it as a huge success, as if it has silenced all the critics who said that this is not a system that works. Yes, please go ahead.
I can explain that for you. It's very simple. What has happened is that the three sets of actions that this government has taken since 2016, first, Notebandi, then the economy cannot recover, the unorganized sector seriously is adversely affected, the unorganized sector is again affected 6 months later on account of the poorly planned GST, and then a few years down the road you have the sudden lockdown at 4 hours notice. Then the unorganized sector is affected even worse. What is the impact of all the unorganized sector shrinking in this manner? That the organized sector is taking over many of the units of the unorganized sector, and it has grown at the cost of the unorganized sector. That's one of the reasons why joblessness has grown. So if the organized sector has grown somewhat, then if you are getting more GST as the economy and economic activity recovers, why are you surprised? And is this a good thing that your share of total tax revenue coming from indirect taxes like GST is increasing at a time when the share of direct tax contribution to the government's total tax revenue, which means corporate income tax and personal income tax, that share is coming down? Is that a good thing? So please don't tom-tom the government's language to me that the GST is. I've given you the two reasons.
No, it's the figures I was quoting, that the government are quoting figures to say that the collections have been high, which means that the system has worked. Yes, I understand.
I've given you the reason why this is the case.
But
so the economy is reviving, and an organized sector is taking over from the unorganized sector.
But what is wrong with it, Dr. Aman Chugh? If the government has, even if we for a minute say that, okay, it is something of a policy decision that is taken, that if you are okay with the roti, you pay 5%. If you want to upgrade to a paratha, pay 18%. If you are okay with the papad, you're fine. If you want to have a fryam, then you pay more tax. With chocolates and mithai, the same thing. I mean, it's making it easy for the common man to keep mithai affordable. However, if you want to go a level up to chocolates, then you need to pay more taxes. What is the problem with that?
No, I just said it before as well. I don't see any problem as of now because we are fighting on a miniature of maybe a 5% of 18%. However, let me bring to kind attention to my worthy colleagues as well. There is a larger problem on hand, which we will be able to not face maybe going forward. See, there were two big marriages in the world. One was between China and America, which we call it as Chimerica. The other big marriage was between Europe and Russia, which was Eurasia. Now, both the marriages have broken off. That will lead to deglobalization, which is lack of trust because China wanted to become a global superpower with 5G technology. And Russia wanted to become more European closer in terms of bringing the Nord Stream 2. Now, this one aspect combined with the second aspect, which is that almost 60% of the wheat reserves of the world is being procured by China as of now, and 40% of the potash and the phosphate, which is required for the production going forward in the world, is acquired by Russia as of now. Now, third issue is the massive printing of money, which is close to $32 trillion of approximately fiscal and monetary policy stuff. Now, these three clubbed together is going to bring a lot of chaos into the present world in terms of high inflation, lower down of the growth, etc. And that would lead to a lot of funds flow possibility coming into India. Now, if the funds flow possibility has to be stopped by the Western world, that means they want to derate or bring down the rating of Indian economy from the present BBB-. And for that, the fiscal deficit is, all the eyes of the globe is idly fixed upon the fiscal deficit, which will be announced in the next budget because we want to have it as a 6.4%. However, we would want to bring at a lower than 6.4% so that in the next 2 years, we are able to cope up with the increasing fiscal deficit, keeping in view that the capital expenditure will have to be increased. And hence, maybe a 5% or 18% on a paratha or a mithai, etc. Taxation experts can always comment on that. But as an economist, I see a bigger challenge coming into the world economy and Indian economy as well.
Right. Your thoughts on this, Mr. Jain, because, you know, we are getting some very interesting global perspectives that there is, of course, global factors at play, and taxation experts, policy makers are factoring in all of this when they decide on certain tax brackets. Your thoughts, Mr. Jain?
Let me first correct Mr. Mehrotra on that first point. The GST was introduced in 2017. We have completed 5 years. And I will say transition is always painful, a little difficult, but I think now that it has stabilized, and we must give credit to the all GST council and the institution which have worked for the organization for this implementation of GST. Second point, Mr. Mehrotra made that it is the direct taxes collections are going down and the share of indirect taxes is increasing, which probably is not correct. Share of direct taxes is also increasing, and because of the indirect taxes GST coming up, enforcement mechanism being good, it is being all computerized, electronic system being there. So the tax collections have improved. That's why we can see now 140 lakhs or something like this figures coming out on that basis. Now coming to the third point which is being raised about it, see the real issue here is that these type of issues are bound to happen. But as I said in the beginning, one should be a little bit broad-minded on this type of, when we are deciding these type of issues, because we should not get into that nitty-gritties who are using it. We should look into the basic substance that at the end of the day, it is a food product. And if it is a food product and it is not falling in the demerited list, then it has to be in 5%. Now, coming to the issue of the economy, the way Indian economy is, I believe Indian economy still continues to be a bright spot. As we see today, the World Bank has also said about the Indian economy. These challenges will continue to happen. And in case we being a mass consumption-based economy, I don't see that any challenges coming up. So
yes,
GST
but I think all three panelists,
I
think, agree on this basic point that 18% on food item is really, not something acceptable. It is exploitative in a way. Professor Mehrotra, you wanted to respond very quickly, sir.
That's right. 3 points. I just want to remind all your viewers that the World Bank has just reduced the projected growth rate of India as well as the IMF has. Secondly, the World Bank in an official report has just told us that in 2020, India contributed an additional new 56 million poor people into the world. That means 56 million out of 70 million who fell below the poverty line of $2.15 in 2020 on account of the management of COVID in India were from India. So much about how much the World Bank is praising us. Secondly, I think with all due respect to my dear colleague, Mr. Jain, I was saying that the share of direct tax revenue, not the absolute level of direct tax revenue, the share of direct tax revenue and total tax revenue has been falling, and the share of indirect tax revenue has been increasing. And this is completely opposite to what economists would recommend to the government. And finally, 5 years is way too long for teething troubles. You can allow 1 year for teething troubles, you can allow 2 years for teething troubles, but you can't allow 5 years for teething troubles. And the teething troubles, if you ask any MSME tax experts of our country, don't talk to MSMEs. They only deal with the big corporates because that's where the big funds are for them.
Right.
The MSMEs are the ones who are suffering on account of the poor design and the poor implementation and the poor planning that went into the GST.
Right. I'm glad we had all kinds of opinions and conflicting and very well countered as well. Thanks, Professor Mehrotra, Mr. Jain, and Dr. Chugh for joining us today.